Hello and welcome to another episode of the Tech Corner. I'm George Tsilis, Senior Markets Contributor here on the Schwab Network. Today we're going to be evaluating Block Incorporated, symbol XYZ, a diversified financial technology company. Block operates under two primary segments. The first we may be most familiar with includes Square, which is their point-of-sale solutions and merchant payment, as well as merchant financing business. The Cash App segment provides a range of financial tools within its mobile application, such as peer-to-peer payments, stock and Bitcoin trading, as well as the Cash App card. Essentially, the Cash App has grown significantly. It has over 57 million monthly transaction users based on the end of fiscal year 2024. The company also engages in Bitcoin-related services throughout its ecosystem. Over time, Block has grown through strategic acquisitions. That includes Afterpay, which is expanding its buy now, pay later capabilities, and Tidal, which actually enhances its culture and entertainment offerings. Competitors include PayPal as well as Visa and MasterCard in the payment solutions business. Now, Block's unique value proposition lies in its integrated ecosystem approach. This combines financial services, commerce solutions within its Square and Cash App segments, as well as integration to serve both business and individual customers. They offer a wide range of services. This includes their point of sale, peer-to-peer payments, and also investments. One catalyst and mention is Block's ability to integrate services like Afterpay into its Cash App ecosystem, which strengthens its position in the buy now, pay later market. This will provide users with seamless financial solutions. Now, the stock is down significantly based on a recent news event. If we go back to the earnings, which were posted on the 20th of the month, the company actually missed on earnings. They posted 71 cents, which is actually a miss by 16 cents, irrespective of the fact that was a growth of 51% compared to 47 cents for the same quarter last year. The company's stock continues to go to the downside. Now, if we look at the top line sales also missed fractionally by 230 million. Top line sales grew to 6.03 billion, higher by 4.5%. Now, the challenge really lies not necessarily on missing earnings as well as top line sales for the quarter. It really comes down to guidance. If we actually consider the company's guidance for Q1, in particular, they denoted some decline in gross margins for Q1, as well as for the entire fiscal year 2025. Now, one would ask the question as to why. Well, it comes down to higher expenses. If we actually consider the company's suggested increase in sales and marketing expenditures, which were significant, particularly in the past two quarters or the back half of 2024, the company also will invest heavily in building its AI infrastructure and tools, including information that their Cash App as well as Square are not expected to improve meaningfully until the back half of the year. Now, irrespective of the negative aspects of the guidance that the company provided, there were some positive highlights to mention. For instance, they reported strong gross margins as a company for the quarter, about 14% year over year. They also grew their Square segment about 12%, as well as their Cash App segment about 16%. This suggests robust customer engagement and financial health. Now, the other thing is gross payment volume increased significantly by about 7.8% year over year to 62 billion. This was last year at the same time around 57.5 billion. The Cash App ecosystem continues to expand. There's no doubt. They do have a strategic focus on user engagement through other products within their Cash App, like their ability to borrow and lend. They also expect going forward on a forward four-quarter basis about 10% top-line sales growth. Now, this is higher than their respective sector average, which is around 6%. This highlights strong expansion in sales. Valuation suggests a favorable position for growth. There are also potential tailwinds from regulatory developments in the fintech sector. From a valuation standpoint, we have to consider just looking at the expected EBITDA growth, particularly in the back half of 2025, of 36%. This suggests relative to a forward multiple around 14 times that the price to earning growth ratio is less than 1. Now, despite some of the positives associated with valuation going into the back half of fiscal year 25, we also have to consider the concerns. Obviously, gross profits, which are lower in fiscal 25 in terms of their guidance, are a concern. The company is in a position to integrate services like Afterpay into its Cash App ecosystem. This will eventually strengthen its financial position in the buy now, pay later market, providing users a seamless financial solution. but at the same time, this is expensive. Ongoing challenges, including sustainable margins, include the high level of capital expenditures. This includes workforce for sales and marketing professionals, technology, as well as new product rollouts in 2025. Mostly, it's the Afterpay and Cash App integration, as well as Square Financial Services bank charter. Block does hold a considerable amount of Bitcoin. Based on their last reported earnings, they hold nearly 8,400 Bitcoin, which can add to the volatility risks. Now, if we look at the technical condition of Block, one thing we have to consider is momentum is weak, which indicates there's bearish institutional sentiment. For instance, even if we look at a 3-year performance, the stock is down approximately 48%. Over the last year, it's down 11%, but in the recent period of time, consider year to date, it's down as a stock about 22%. This suggests there's limited investor confidence, at least in the short term. If you look at the long-term condition of the stock, over the last 3 years, the stock is still trading below its 200-week moving average, which suggests that a major trend reversal is still not in the making. If you go back to a 1-year chart, the stock is also trading below its 200-day moving average. So in summary, if we take in consideration Block's growth and profitability, these metrics are strong on a trailing basis. However, the increase in capital expenditures for workforce technology, artificial intelligence integration, as well as integrating Afterpay within its Cash App ecosystem, that actually might push some of the returns to investment into the back half of 2025. Now, next week on the Tech Corner, we'll be featuring the lead architect in artificial intelligence, NVIDIA. Other stocks to keep in mind next week include cybersecurity names Zscaler, as well as a couple of other artificial intelligence companies, including Marvell and Broadcom Technologies. That's it for this edition of the Tech Corner. I'm George Tsilis. We'll see you next week.